Naresh Murani, Kunal Bothra, as well as Vinit Bolinjkar are there with us on the show. Naresh, your sense as far as the market is concerned right now, what would be your trade? Would you still look at buying this at around 19,986 for the Nifty?
It would still be a hold rather than a buy because we are at overbought zones on the index. It's just that the constituents are not overbought. We are seeing Reliance Industries on an adjusted basis has hit a new all-time high. We are seeing that is just 1% higher than maybe the all-time highs. ICICI Bank, SBI, everything is just closer to all-time highs. So the index is overbought, but the constituents are not. So time to just ride on to the moves.
Coming in 18 points away from that all-time high level. Kunal, your best trades?
From a BTST perspective or?
From any perspective, what is the best trade if you had to take something?
Hold longs. I mean, still
at Nifty Bank, which indices, which stocks?
Whichever
whatever, just buy something.
You have to be long. You can't be staying out. So I've seen so many people actually staying out, waiting for some dip, some correction to buy the stocks. I mean, and that's not happened in this kind of a bull market. And I think one of the classical features of this bull market, which I would probably categorize, is that a classical the health of your portfolio matters significantly because it's not that all sectors have participated full throttle at every leg of the bull market. So if your portfolio is well diversified enough, you would have probably gained substantially right from the start of this bull market till right now, and even in every phase of the bull market, whether it's autos, the infra stocks doing pretty well, pharma, FMCG, banking, private sector, PSU banking stocks, etc. So I think it's a great mix of portfolio which could probably have done or outperformed rather than a skewed portfolio towards one sector.
Jaybala, I think the message from Kunal here in the studio is pretty long. Go long on anything and everything. What's your long list looking like?
No, I've had all my long list, something like, I've been focusing on the mid cap and the small cap space, something like Electric, which I picked up a few weeks ago. It's ran up 35-40%. So, I would say this bullish, but I won't say, you should be long on everything. But definitely, you got to pick up, look at sector rotations and stock rotations. Look at laggards because that's what bull market does. It picks up the laggards and tries to, equal the performance and level the field. So now, what has been a laggard? Keep looking at that, and allocation should be sensible here. The markets are very stretched, and the optimism is running high. So that's the only negative for the market.
The optimism is definitely running high. Street doesn't want to take into notice any negatives right now. Jay, we'll let you go on that note. Thank you so much for joining us today. But let's take this conversation to Vinit Bolinjkar as well. Vinit, what's your take as far as the market is concerned? Do you think it's time to be a bit cautious, as Jay was pointing out, or you're in the camp what Kunal was saying, just go long and buy something?
Said that like Naresh said that the constituents are not overvalued. So let me give you a few numbers. If you look at the PEG ratios of a few HDFC and ICICI Bank, they're at 0.85. SBI is at 0.3. Bharti Airtel is at 0.3. Maruti is 0.5. Axis is 0.4. Sun Pharma is at 0.5. Bob is 0.2. So if you see all the index components, they are extremely undervalued. And so I believe that the index has got substantial uplegs to do despite being, as people would call it, overbought. So I believe that, it's the time for the large caps to move. And we've already seen fireworks in mid cap and the small cap. But what has been happening is that the mid cap and the small cap have got huge earnings growth and re-rating of multiples also taking place. So the A group or the large cap were getting ignored. But they can't be ignored any longer. And I believe that these stocks, which I mentioned to you, are going to be the outperformers in the Nifty going ahead.
Right, 19,986, that's where we're currently at. Kunal, I just wanted to get in a sense, I don't know if you have a metric to quantify that or not, but are participation levels also at an all-time peak?
No, that's exactly the point which I was highlighting, that you have to stay long. I mean, I'm not saying that you create any long positions over here, but so that was not the point which was implied. But I meant was that you can't be sitting out of this market, and at least large cap names and the ones where you have more higher degree of conviction, or at least there is some sort of safety, which is attached to these large cap stocks. I think that's the pocket which I think one should start trading into rather than sitting out, waiting for that correction, waiting for that drop in stock prices. You have to start participating on the upside, because at best what we've got is just a 200-point consolidation. We've not even gone through a 500 or a 700-point correction on the index in this last, I think, 1,000-1,500 points for the index. So that itself tells you the health of the market, that we are in no mood of going to any kind of a correction, price-wise at least, but more of time-wise.
Okay, so that's the take coming in. In fact, we are expecting numbers from a couple of companies. But before we get to the previews, I want your view, Vinit, when it comes to Polycab and the entire cables and consumer durable space. Polycab has set the entire sector on fire. Will you still be a buyer?
Absolutely. And it's been a fantastic numbers from Polycab. And they're looking at expanding their presence in the B2B space. They've identified almost 150 white spaces which they want to populate. So the growth numbers will continue to come. And obviously power is going to be, we are going to double our power capacity in the next 7 years. And if you're going to do that, obviously, the growth rate for the industry is going to be very large. And for the incumbents, it's going to be a disproportionate higher growth number that will be there. So I believe that as they start as the market gets more organized, Polycab and the other listed players will keep gaining market share from the unorganized sector. So I believe that these are the segments to buy into.
Okay, let's also try and find out what the expectation is from Unilever as well as Infosys. And firstly, Infosys, Anisha, what are you penciling in?
Well, I'm expecting that the growth is going to be close to 1%. Of course, the street is very divided. There's, part of the street which expects there's going to be a decline of 1% in constant currency to this. Let's pull it up to Infosys now, please, because we're talking about that and not HUL. And the growth is expected to be as much as 1% as far as Infosys is concerned. But the street believes in terms of dollar revenue, we are expecting a number of $4,561 million, which means a growth of around 0.8%. The margin is expected to remain flat quarter on quarter. We are not expecting a big move. Maybe 20.9% is what we have penciled in. Last quarter, this number was 21%. Not expecting an impact of wage hike, etc. this time. So fairly flattish at that. The profitability is also expected to remain around that 6,150 mark. Again, the range is very wide, right from 5,800 all the way to 6,300 as far as profitability is concerned. So that's fairly wide. What the street wants to know is whether the guidance will be maintained or not. 4 to 7% is what they had said last quarter. The street is expecting it will be narrowed to 4 to 6%, and the EBITDA margin guidance for around 22 to 22%. What will also be important is the management commentary on deal wins, because in order to even achieve this 4 to 7% growth, the company and the management needs to bag in more orders, because there have been a few ramp downs and a few cancellations that had happened. So they need to make up for all of that. Plus, there have been many senior level exits. So not only attrition as a whole, but those senior level exits is something which has the street worried a bit. So all of these factors is something that we'll try and decode with the management. Of course, 4:30 is when the press conference is, and we'll get all of these questions answered then as well. But then there's another press conference this afternoon or this evening, and that's HUL at 4:15. So we'll get a plethora of numbers towards the end of the trading session or post that. But what are the expectations from HUL? Let's go across to Vinny to understand all of that.
Absolutely. So in terms of the FMCG major, what we're expecting in revenue growth and 8% revenue growth, margins are seeing a bit of an expansion there of 80 basis point. And what will lead to the margin expansion, let's not forget, is going to be the correction in the palm oil prices, PFD prices. That is something that will be supporting the EBITDA margin expansions overall. But there's one thing is that the milk inflation has still continued. So the HFD segment, that could see a bit of a subdued demand coming in even this time. Those challenges of milk inflation still continue for the HFD segment is what we're expecting. Let's not forget, summer season, that because of the unseasonal rains and the weather conditions, that is something that we could expect an impact on the summer portfolio, and that is going to be the ice cream products. For that could see a subdued demand over there. While in the home care and the beauty and personal care segment, we could see a moderate growth coming in both these segments as well. Premiumization is a factor that we are keeping an eye out on. In terms of volume growth, we're expecting a 5% volume growth this time coming around, and mainly this time it's more of a volume-led growth that we could see coming in than a pricing-led growth that we've seen over the last year for HUL. Other than that, factors to watch out for. Let's not forget Rohit Java as the new CEO of the company. This is the first time that he will be talking to the press as well in the press conference. What are his comments coming in? That is something something to watch out for. Demand outlook, margin outlook, as well as strategy for the HFD segment. What is that over there? Keep an eye out on that. And how is the recovery in the rural segment? That's a factor to watch out for as well.
Okay, Vinny, we'll leave it at that. Still counting down to 20K. Hopefully tomorrow, if not today itself. Polycab, that's your big star performer today. 7.5% higher still. HDFC AMC, RBL Bank, Balrampur Chini, Glenmark are all names which are sitting extremely abuzz in trade. ABB, of course, is the one which is really slammed down about almost 6.5% or so. We flagged off earlier as to how ABB, the global holding company, the guidance given from them was a very, very bleak picture, and therefore you're seeing a sentimental rub-off on ABB India as well. Of course, the stock has also recovered from the session lows, but still lying lower by about 6.5% or so. Vinit, anything that's on your buy list right now?
We like LT Foods. We believe that that stock has got significant legs, particularly considering what is happening in Ukraine and Russia. Russia is marginalizing Ukrainian grain coming to the market. That is going to lead to the other staple, which is rice, doing very well. And Pakistan is also compromised with its financial mismanagement. So we believe that the rice stocks will do well. We like LT in this primarily because of four key triggers. One is the export pricing being stable, volumes going up, market share gains from Pakistan. Their domestic market is doing very well. So we are seeing unorganized to organized, it's a 10 lakh crore market. And the organized sector only is at 10% to 12% market share. So this we expect by the end of the 10 years to shift to 90-10, the reverse. So we believe that packaged foods will do very well. And the company has entered into the snacks market with their own variant of rice snacks, which they have tested in the Bangalore and Delhi, doing very well. And we believe that the company can continue to grow top line at around 10-11% with a margin gains about 5-6% to at least 80% higher profits from here. So we target 230 rupees on the stock in the next 18 months.
Colleague Sharad had pointed out LT Foods just last week in his Khabar segment, and since then, of course, the stock has been moving higher, talking about how a lot of HNIs are also looking at buying that. In fact, since we're talking about Khabar, let's go across to Sharad and find out what the Khabar from dealer's room is today, because I think today he has another interesting stock that the dealing room is chatting about.
Well, yes, in focus we are having Gujarat Ambuja exports, and what we are gathering from dealers is that there has been a sustained buying coming from the domestic mutual fund houses in this stock. Now, looking at the volumes, that's almost 5 times its daily average, and also the stock itself is above the 200 DMA mark. Even the monthly numbers we checked for the delivery, that is as high as 50%. Now, last time this happened was in the month of May, and that time the stock rallied almost 20%. And apart from this, as per the channel checks, it's suggested that the company will be getting a large order in terms of a foreign collaboration coming from Europe. Now, looking at the Q1 numbers, it's expected that the numbers are expected to be strong, especially with the adjustments coming in the forex part, which should be aiding the bottom line numbers as well. Now, do remember that the international corn prices, they have also corrected by almost 7% over the last 5 trading sessions, and the important thing is the company itself is a corn derivative or a processing company. That means roughly 60 to 70% of the raw material cost is the corn. So this is why this is also a rub-off effect coming on the company as well.
Okay, Gujarat Ambuja Exports, that's the one which is keeping dealing rooms abuzz. Quickly take stock of where the market is at currently and where the index is. 19,985 thereabouts is where we're currently standing at. Pharma, banks, FMCG being your big contributors today. And of course, ITC is one such case in point. Remember, we just flagged off for you a while back. ET Now exclusive sources picking up that they may be looking at an announcement of their hotels demerger, and that could happen ahead of their August end AGM. That's ITC in trade for you, closing in at the highest point of the day, 490 plus on the stock as we speak right now. Vinit, do you still find value on the table for names like ITC? Our sources tell us that perhaps a demerger of the hotels business could be on the cards.
So, this demerger saga has been going on for donkey's years. But that apart, we believe that double-digit growth in the FMCG space. No one can outbeat ITC. None of the other companies, Varun Beverages has its own run. So we believe ITC will keep performing better because foods, as I just recounted to you, is in a good space. Cigarettes are doing well.
Seem to have snapped that line. It's pouring outside, and that might have impacted the lines today as well. But just quickly taking stock of what's happening globally as well, because while we are inching towards that 20,000 mark, we are, a bit alone in that. And I say that because Asian markets actually ended a bit mixed. Nikkei was down over 1%, 1.25%. We also have the pre-market rates coming in from the US, and that is not very supportive. The Dow is pretty much flat right now. Nasdaq is suggesting a cut of almost 140 points. So as compared to that, Indian markets are doing all right. Though European markets are doing okay for now. You have the German DAX, which is up around 0.5%. FTSE is doing all right, and French CAC 2 is sitting with a gain of around 0.3%. And that should be something which is supporting our markets as well. But time now to get the BTSC ideas out of the way. Naresh, what's the BTSC idea?
So first would be a buy on Grasim, broken out about 1800, looking at some follow-up move over the next few sessions. Stop loss at 1790, target price of 1880. Second is a buy on Gale India, defensive bet, trying to cross that 111 to 113 mark for the last many months. Came close to it even today. Stop loss at 109 and a target price of 150.
What about you, Kunal?
So there'll be a buy on Axis Bank first, expecting the stock as well to come back to that 1,000 plus mark. So 1,010 is the target for Axis Bank, stop loss at 960. And Sun Pharma is the second stock which I would recommend as a buy. Again, classical breakout about that 1,100 mark on the spot as well as in the futures today. 1,130 as a target, stop loss at 1,082.
Okay, while we're counting down to 20K and it's a busy evening ahead of us as well, we're awaiting two big boy numbers, that's Unilever as well as Infosys, and a plethora of other mid-cap earnings as well. But Anisha, lots on our plate tomorrow as well. Walk us through what are the cues to look out for?
Well, I think first up, of course, it will be the earnings reaction. So HUL as well as Infosys, we'll see the reaction come by tomorrow. A lot of other mid-cap IT companies as well to watch out for. So, of course, Persistent, Emphasis, Coforge and the likes will come out with its earnings later today. So, all of that will react tomorrow. But tomorrow itself is going to be a very busy day for earnings. Look at that. Reliance Industries comes out with its earnings. HDFC Standard Life, Ultratech Cement, JSW Steel, Vedanta. Lots of earnings lined up for us tomorrow as well. So, it's going to be a busy Friday. Yes, you might be thinking about going to Oppenheimer or Barbie, but that's not the case because we have a whole host of these earnings to track tomorrow as well. And Reliance Industries, as always, will make us wait till late. 7, 8, 9 p.m. We don't know when exactly the numbers will be out. But interestingly, Paytm too will report its numbers tomorrow. Separately, you have a lot of corporate action lined up. Federal Bank, wherein they are going to mull the fundraise tomorrow. RT Drugs is going to decide and consider a buyback as well. GNA Axle, wherein there could be a bonus announcement coming tomorrow. So we'll watch out for that. And of course, as we were discussing, it's going to be Oppenheimer versus Barbie tomorrow. Are you guys going for either?
Oppenheimer for sure.
Yeah.
I would want to.
But have you booked the tickets? Because
No.
nothing is available.
We'll figure it
Thought
out.
as much. What about you?
We'll figure it out.
But Barbie, because of the kids, or you're going for Oppenheimer?
Oppenheimer.
Oh, so clearly it's a
Saturday or
3-0 for Oppenheimer. I don't think we'll get the tickets. At least I will not get the tickets where I want to watch it. But nonetheless, let's see what happens. But for now, what is underway is a good party as far as the market is concerned. And it's quite a treat to watch this one as well, because it's been a solid rally from that 19,000 to 20,000, managed to scale it or almost scale it within 15 days itself. 20 points away, but it's not happening in a jiffy. That 20 points is taking us a lot of time to really, materialize. But Vinit, before I let you go, talk to us about what are the other internals that you're watching out for in the markets right now, because the mid caps have been doing all right. There's been a lot of pockets like capital goods, etc. But today, when we heard the commentary come by for the ABB Global Major, we suddenly saw the likes of ABB and Siemens tanking quite a bit. Do you think these companies are just looking for reasons to correct now, given the sharp run-up?
I've been privy to information that a lot of business from Siemens and ABBs of the world is coming to their Indian subsidiaries, which are not listed, right? And these global companies are suffering. So we are seeing that drag these stocks down because they've already run up very quickly, very fast over the last few months. But I don't think that the same thing will play out with the domestic stocks, the domestic listed stories in the same space. and we remain buyers out there.
For ABB, the ABB group earnings, they've handed out a mixed guidance on the sidelines of that, stating that in the third quarter, they anticipate a low double-digit comparable revenue growth. And for the calendar year 23, they anticipate a comparable revenue growth to be at least 10%. Expect operational EBITDA margin to be above 16%, however, and they are saying that the order growth is going to get impacted because of the high base too. Orders in Asia, Middle East and Africa have seen a decline by about 3%, though up 5% on a comparable basis, and that the decline was more than offset by strength in markets such as India. But overall for the group, yes, they do see a low double-digit comparable revenue growth for the next particular quarter. So that's why I guess ABB is also seeing that little bit of pressure. How is it that we're shutting shop for the day though? Still aloof from that 20K mark, but yeah, optically almost in any case there. Kunal, you were making the point as to how the underperformers are making a comeback. Kotak Bank then, the rank underperformer from within the banking space, is that the stock to bet on in the near term?
Well, it seems like, because I think after quite some time, it's showing all those classical signs of breakout, price appreciation, patterns being completed on the bullish side for Kotak Bank. It's still yet to confirm a big breakout about that major resistance, which is around the 2000 mark for the stock price. But then eventually, I think the stock should scale past about that level. So I believe in this leg of uptrend, it's found its mojo back. The retracement in the last 2-3 weeks for Kotak Bank was very minimal as compared to the previous retracements, where the stock had actually corrected more than 70-80%. So I think that aspect, there's a very strong chance that it should also be one of the few large cap names banking stocks which can make a new high.
Okay, we begin winding up for the day. So no, we've not closed at that 20K peak, but yeah, 19,968 within short distance of that 20K mark. Kotak, ITC, Dr. Reddy's, ICICI Bank, Maruti, Bharti, and then of course SBI along with Axis. But the big story today has also been the Reliance demerger, the Jio Financials demerger that is, and Reliance as well. The adjusted value holds higher by nearly about 2% at 26.24, and this is sans of the Jio Financial business. The broader markets as well have held out quite smartly. So Glenmark, RBL Bank, Polycab, these are all names which have managed a good move for themselves. But lots to happen from now up until when we come back for trade tomorrow morning. A lot of earnings as well that the market needs to be digesting. So we'll pick up all the action tomorrow morning at 8 a.m.